Well, Hims and Hers stock, what another earnings quarter from them. It's another triple beat from Hims and Hers. The earnings were absolutely amazing, 10 out of 10. And today I'm going to do an earnings review for you guys and go through the earnings and give my thoughts on it. But as you can tell, I was very, very impressed. It was one of those quarters where I sat back a bit and I went, that's just so good. When you look at the business, the financials they're doing, that is very impressive. And obviously for me, you know, it's a stock that's done really well. I'm already up a ton on my shares, but I really sat back after looking at those earnings going, this is generally a stock that could be a 5x to a 10x stock for me. Like, this is, every so often in your portfolio, if you do an individual stock picking, you need to get like a home run. And the more I look at Hims and I look at the numbers they're doing, I go, this stock could create that home run for me. This could be the next one on the list that really pushes up the portfolio. Yeah, really, really good. There's a lot to talk about. Just to let you know, I am going away. Well, literally in like 2 hours, I'm supposed to be going to the airport. I'm currently recording this at 6 a.m. I've done the conference call at like 5 a.m, 6 a.m. Need to go to the airport in 2 hours. And by the time you're seeing this, hopefully I'm on holiday in Italy. So I'm trying to squeeze this video in for you guys. And in the next few days, I'm going to try pre-record one more video. But in the next few days there might be not so much content for me. Don't worry though, I'll be back. I'm just having a few days away on holiday, so if I'm missing, that's where I'm at. But I thought I'd try squeeze this Hims and Hers video in for you guys, so make sure you hit that like button for that. So let's go through these Hims and Hers earnings. So I'm going to do a little bit of housekeeping and then I'm going to get onto the proper numbers. Some of you guys might want to skip the next 2 minutes, but first of all, I want to just talk about the last few days. So the last few days, I've had so many comments about Hims and Hers, and I wasn't going to talk about it because I said I'm not going to talk about it because more than likely on Tuesday, I'm going to do a dedicated video to Hims and Hers, which is the earnings, and that's more important. That's the most important part. As a shareholder, the most important part is the earnings, because you look at your business, you look at how it's doing financially, and you want to see the revenue going up in the right direction, the profitability going up in the right direction. And if you hold the company for 4, 5, 6, 7, 8, 9, 10 years, and they keep going up in the right direction, you're probably going to do really well as a shareholder. And that's the main thing. And the last few days I've had so many questions about Hims and Hers when this is the most important day, the earnings, because that's what we want to see. We want to see the financials still getting better. And the reason why I got so many questions in the last few days is because the stock dropped. Now, just because the stock dropped, guys, don't panic. You know, I think this is more the newer investors. You guys that have been through like 2020 and 2022, you're like, yeah, that was nothing, guys. Don't you worry. But for new investors that may be in the stock, like, don't panic. Like, that's part of being, unfortunately, growth stocks are a little bit more volatile. Hims and Hers is a growth stock. And with what's gone on in the last few days, it's going to move, especially with the year it's had. It's up, you know, it's up 100 and something % still with the drop that it's on. So don't panic, guys. It's part of the game. Don't lose, you know, when the stock, don't be one of those investors that when the stock goes up, you're looking at your count every 10 minutes going, look at how much it's up. And then as soon as it goes down, you're like, oh, panicking. Just sit back and let it do its thing. Look at the financials. If it does the financials, that's what will help it do. But that's what I said in 2022 when the stock was $3, $4, $5, $6. People were commenting. Andy Pickhead was saying that obviously it was uninvestable. You know, hey, in the last few days, I hope he's been buying some shares in this stock. What the big thing is, look at the financials, guys. As long as the financials improve, that's where you'll get your return, and that's the key thing. Next thing is obviously the share price reaction. The stock actually went down after its earnings, and I was like, I can't believe it's doing that again. We've not seen that for a while. The triple beat and the stock goes down. You're telling me the company should be valued less. The market's going, well, we're going to value less off a triple beat. That's where it's like a little bit ridiculous, guys. As we're recording this, it's only 6 a.m. though, and by the time you guys see this in the evening, there could be a lot more share price movements by then. So just bear that in mind. But it looks about break even now. Yeah, that's shocking to me. A company that comes out with a triple beat like this should not be valued at where it was valued 24 hours ago. The company's a lot better. So the share price reaction for me is one of those that it's a little bit frustrating, but don't worry. As long as financials move in the right direction, we'll get the share price rewards as we've seen in the last few years. So share price reaction, frustrating. Reminded me of 2022 where it was like, come on, this is unbelievable. But yeah, don't worry about that too much, guys. So the big thing is focus on the financials. And what we have with the financials here is we're very, very good. So EPS was a beat by 0.01 on 0.06 EPS on a GAAP basis, which is key to point out. Revenue grew 51%. This is really good growth. By now, a lot of people had this coming in, especially if you look at the start of the year and what analysts were forecasting. A lot of analysts were forecasting for this to be like 30% growth this year, maybe 40%. 51% is very, very good. Beat by 13 million, that's no small beat as well on the numbers they're doing, that was very impressive. But all the metrics are moving up in the right direction. EBITDA went from 10 million to 39 million. Big thing as well was the guidance hike up. Big guidance hike up. Revenue went from a mid-guide of 1.21 billion up to 1.38 billion. That's insane, guys. EBITDA from 127 million up to 147 million. These are very, very big increases. So very happy with that. I'm going to skip these 2 points in blue till later on in the video. Subscribers up 43%, which is really good. The money that they're making from their members is up 8% as well. Free cash flow went from 10 million up to 47 million, which they're pointing out is higher in this quarter than what they did all year, which shows you how much that profitability is now ramping up inside the business. The cash flow went from 96 million up to 126 million. We already know the company's got a fantastic balance sheet, but that balance sheet's just getting stronger and stronger, and because the profitability they're now generating, by the way, people said they would never make profitability. Look at the profit they're doing right now. Because of the profitability they have, that's going to lead to more share buybacks or the option for acquisitions, which we'll get onto in a little bit as well. Marketing, very, very good. The big bear case I sometimes see, used to see, not as much now, is that people said they only grow because they spend a ton on marketing. But when you actually look at the numbers, if you look at the spend that they're doing on marketing and the revenue increase they're getting, the revenue they're getting from the marketing is more. The revenue they're getting is more than the marketing costs. So yeah, keep spending that money if you're getting them that bring back of revenue a lot higher than your marketing spend. And as a percentage of marketing to revenue basis, it was the best we've ever seen, which is that's perfect. So really, really good from the marketing point of view. Little things to just kind of keep an eye on is stock-based compensation. There was a slight increase once again. The thing is that when you are taking on the new members that they have taken on the board, and when you are executing like this, do you want the management team to be rewarded because of that? It's a bit of 50-50s that it wasn't quite a bit increase, but at the same time, do you want the best of the best to be rewarded? I'm sure if they keep doing these financials, you might be okay with it, but point it out, costs did go up a lot in this quarter, so I hope they do manage that and don't let it get too carried away. But when you're trying to support all this growth, they are going to go up. So once again, I'm okay with it, just something to keep an eye on. That was probably the only two negatives that I did pick up from the whole earnings, and they're me being very, very picky. And there is new treatments coming that they pointed to. They did buy a new facility in this quarter, so once again expansion. GLP is in 30 states. They said that by the end of the year they're going to get it nationwide, so still big growth. And from what they were saying in the quarter, the hint that they gave me, the management team at Hims and Hers and Andrew Dunham, is that it sounds like there's still a big shortage, so don't worry about that too much. Weight loss did get over 100 million in revenue. This is the new category they launched at the back end of last year. They've done it in half a year. It normally takes them about a year and a half for a new category to get over 100 million. That obviously was absolutely smashed. So yeah, looks like the weight loss category has been a very good addition and is contributing very, very well. Sounds like to me they are looking at potentially some more merger and acquisition. Obviously they made it for a new facility in this quarter. I think a lot of that is to support maybe the GLPs, weight loss injections. But yeah, 100 million in, I don't know, I've seen this with another company this week as well, or was it last week? Share buybacks, like companies announcing share buybacks and then like keeping it really quiet and not putting it, I would put it like near the top of the press release. As far as I'm aware, they said that they have done another 100 million, announced another 100 million share buyback. They did complete the last one and now they've added another one in. Obviously with the cash and profitability they're doing, they're able to do it and the money on the balance sheet. So yeah, that will neutralize one of the little negatives that I did have, which was the stock-based compensation. So that kind of little picky thing that I had was kind of covered there, which is why I wasn't too bothered about it. What I will say about the share buyback is that it's over a 3-year period, so don't expect it to be as aggressive as the last share buyback. The last 2 points is that they said that the GLP one actually only contributed 15 million, to the financials, the revenue, which if you take that out, the company was still growing 44% growth. So even without this, if you're concerned around this maybe not being a long-term benefit for Hims and Hers, don't worry, because even under the business it's still growing very, very fast even without that there. They did point out that the gross margins will drop slightly because of the expansion into the new facility and the new GLP-1, so there will be a drop in the gross margins because that's around about a 50% gross margin, but then they should recover it as they ramp up a little bit more and scale, and the facility gets settled a little bit, and they should see a rebound in the gross margin. So if any bears, we know what bears are like, they'll try to pick something out and go, oh, it's the end of the world for this business because this metric is going wrong. And you might see that from some bears, is that they go, oh, well, the gross margin's going down. Well, don't worry about it too much because they've already called it out, and the gross margins are still going to be very, very high in the 70% range. So don't worry about that at all. I got to say, the call, like, I don't know what was going on with Andrew Dunham's line, but it was terrible. That's something that they can work on there. But overall, yeah, really, really good quarter. We had so many things that we didn't really know what was going to happen. Obviously, it seems a long time ago, but we had all the maybe the bit too political tweets from Andrew Dunham. Clearly no impact from that, as you can see here. And obviously the GLP-1, how much is that going to affect the business? And it's affected it in a very good way, but it's still not something like if it was to disappear overnight that you'd be like, whoa, this is the end of the business. It's still a very, very small part of the business, but it's a nice benefit on top. Yeah, overall, guys, like, from a share price point of view, I personally wouldn't worry. This is why I always go into listening to earnings and doing the earnings and then look at the share price. I don't let the share price cloud my decision around a stock. I look at the earnings and go, right, in my opinion, this earnings was good, bad, whatever it is, and then I look at the share price reaction and go, well, I'm not sure about that one, or like, see what the reaction is on the share price. And I looked at the earnings and I thought, these are good earnings. I expect the stock to be up, and it wasn't up, but I think it will eventually in the long term react to, if you keep growing at 30, at some point the growth will slow down for this business rather than doing 50% revenue growth. But even if it slows down to 30%, 20%, and they keep ramping up the profitability they are doing, yeah, it's going to go really well for this business. Like the margin expansion as well. When you look at the EBITDA margins that are expanding, now the profitability margins, it's very, very good as they keep scaling up. And as long as they keep doing this, guys, the shares will get rewarded over the next 5 years. And like I said, for me, the conviction I have in Hims and Hers now is very, very good. Obviously, because it's my second largest position, but yeah, it's great. And if you are not holding Hims and Hers and you feel like you're missing out and you look at the current share price drop, I don't know, maybe you want to pick that shares up, I'll see. But I personally won't. The point where I'll pick some Hims and Hers shares up would be if it went really low, like, $11, $12 maybe. That's where I would pick, because it's already my second largest position really. I don't really need to add too much in. But yeah, as conviction goes, as the second largest position, it just makes me more confident to keep holding the stock. It's very, very strong numbers from Hims and Hers, and if you're a shareholder, I'd be happy. It looks really exciting, and I look forward to where Hims goes in the next 3, 4, 5 years at the moment. So really good. Well done to any of you guys that are holding Hims and Hers shares, especially any of you guys that are holding it still from like 2022 at like $3, $4, $5, $6, $7, $8. I'm sure you enjoyed this one. Hope you enjoyed the video, guys. If you could, hit the like button. See you in a bit.